If you're new here, welcome, I'm Paula. On this channel, we don't really do hype, moon calls, or pretending anyone knows exactly what price is going to do next. What we focus on instead is understanding how markets actually work, why certain assets behave the way they do, and how to think clearly in an environment where there's a lot of noise, emotion, and quite frankly, bad information. And today, I want to talk about XRP. Because XRP probably sparks more debate, frustration, and outright manipulation claims than almost any other major crypto asset. Every time price underperforms expectations, the same arguments appear. It's being manipulated. Whales are dumping. Institutions are suppressing it. The SEC will never allow it to move. So the real question is, are these claims wrong, or are they just incomplete? Because the truth isn't there's no manipulation, and it isn't XRP is evil suppressed either. The truth is more interesting than that. XRP sits in a very unusual position in crypto. It has one of the largest and most loyal communities. It has a clear real-world use case. It has deep ties to enterprise and payments. And it has a price history that hasn't matched the conviction of its holders. That combination creates emotional pressure. When expectations are high and price doesn't respond, people naturally look for external explanations. And that's when manipulation narratives thrive. But before we decide whether XRP is being held back, we need to understand what kind of market XRP actually trades in. Because not all crypto assets behave the same way. So let's start with something very basic, but very misunderstood. XRP does not behave like a scarcity-driven asset. It has a large total supply and, more importantly, a predictable supply release mechanism via escrow managed by Ripple. Now, people often call that escrow manipulation, but here's the reality. Markets hate uncertainty. Ripple's supply is one of the least surprising in crypto. Every participant knows how much exists, how much is circulating, how much can enter the market. That removes shock-based price discovery, which means XRP doesn't pump on price scarcity. It moves when demand structurally absorbs supply. That is slower, that is less exciting, but it's far more aligned with infrastructure assets. This is also why circulating supply versus total supply matters psychologically. Perceived scarcity drives speculation. XRP has never been marketed as a meme scarcity play. It's positioned as utility infrastructure. And infrastructure doesn't behave like a meme coin. Here's where the nuance matters. Yes, XRP's supply and liquidity are managed. But managed doesn't automatically mean malicious. Every large, mature market is managed. FX markets, bond markets, commodities, equities. Liquidity is shaped, volatility is smoothed, stability is prioritised. XRP sits far closer to FX and payments infrastructure than it does to speculative altcoins. So when people say XRP doesn't move like other cryptos, that's not evidence of suppression, that's evidence of category mismatch. And this is where most narratives really fall apart. There's an assumption that institutional involvement means they're holding down price so they can accumulate cheaply. That's rarely how institutions actually operate. Institutions care about liquidity, stability, regulatory clarity, operational reliability, not short-term price appreciation. When we talk about XRP's institutional usage, we're talking about ODL corridors, cross-border settlement, enterprise payment flows. And those systems do not benefit from extreme volatility. A payment rail that swings 30% in a week is not attractive to banks. So yes, price behaviour is influenced. Yes, volatility is smoothed. Yes, liquidity is managed. That's not suppression, that's integration. And importantly, institutional adoption is quiet. Sometimes institutions are testing. Sometimes they're waiting. Sometimes they're not involved at all yet. That's not bearish, it's just slow. Let's look at ODL corridors, because they create transactional demand, not speculative demand. That means XRP is used, liquidity is sourced, transactions occur, XRP is recycled. That doesn't automatically create price spikes. ODL scales with volume and repetition, not hype. So the question isn't, why didn't ODL pump price? The real question is, at what scale does usage meaningfully impact liquidity dynamics? That's a very different conversation. Now we have to talk about regulation. The SEC lawsuit absolutely mattered, but not because it capped price by force. The real impact was uncertainty. Markets can price bad news. They struggle with unresolved legal risk. For years, XRP carried a regulatory question mark that limited US exchange access, institutional participation, capital inflows. That uncertainty acted like friction. As regulatory clarity improves, that friction reduces. But clarity does not mean an instant upside. It means normal price discovery can resume, and that distinction matters. So, looking into early 2026, XRP's price is shaped by supply structure, regulatory clarity, institutional participation, and broader market liquidity. Not secret levers, not a single event, and not retail sentiment alone. This is why blaming manipulation is emotionally satisfying, but strategically useless. The better question is, what conditions actually force price expansion into a managed system? Because, let's be clear, markets are not free, they are managed. Liquidity is guided, volatility is shaped, incentives matter. That's modern finance. The mistake people are making is assuming management equals suppression, influence equals evil. In reality, managed systems are predictable once you understand the rules. XRP isn't uniquely manipulated. It's behaving exactly like an asset being integrated into a regulated financial system. Right, now let's bring this back to something practical. Whether you're bullish or neutral on XRP long term, the reality is this market is moving. Volatility is increasing, ranges are expanding, opportunities exist both long and short. And this is why I use Blowfin for trading. Blowfin gives deep liquidity, strong execution, futures access, proper risk tools. So if you want to stop watching markets and start benefiting from movement, this is the time to get set up. Using my Blowfin link gives you deposit bonuses, trading benefits, and access to the same environment I trade in. And honestly, not enough of you are taking advantage of that. If you're serious about improving how you trade, now is the moment, not when things feel safe. The link is in the description if you want to check it out. Trading is one thing, long-term holding is another. If you're holding XRP or any other crypto long-term, it should not live on an exchange. That's why I use Tangem. Simple, secure, self-custody without complexity. Exchanges are tools, not vaults. My Tangem link and discount code are below. And at the moment, Tangem are running a New Year's sale. So stack their code along with my discount code Paula for an extra 10% off. So, what was the point of all this? The point is this. XRP's price is not a mystery once you stop treating it like a meme asset and start treating it like financial infrastructure. Manipulation isn't the enemy. Understanding structure is. Once you understand how managed markets work, XRP stops being frustrating and starts making sense. And this is exactly why on this channel we focus on structure rather than hype. Because once you understand why markets behave the way they do, you stop reacting emotionally and start making better decisions. So if you want to learn the exact strategies we use to make money in both the bull and the bear markets, we've made a completely free course for you. It's called the Crypto Liftoff course. There's no fluff, no promises, just a framework. The link's in the description. If this helped you see XRP and markets more clearly, give the video a like, subscribe if you haven't already. Thank you so much for watching and I'll see you in the next one.